How to improve your credit score without debt. Hello winners! In this video, you will learn practical tips on how to improve your credit score without debt. Frankly speaking, credit scores are crucial numbers that determine your creditworthiness, whether you get approved for affordable loans or mortgages. Even more, a credit score affects the interest on any financial obligation you take on you. That said, it's important to maintain a positive credit report with financial institutions. The report, which is the feedback of your credit score, features your credit history. Prominent personalities like Dave Ramsey equate a high credit score to living in debt and playing the debt game smartly. However, is it possible to learn how to build credit without debt? Let's find out in the rest of this video. If this is your first time on this channel, smash the subscribe button and hit the notification bell so that you don't miss out on any video I upload next time. Let's get started. 1. Ensure you pay bills on time. You may wonder, how does paying bills affect my credit score? After all, they are not credit and therefore not reported to the bureaus. Well, it doesn't up until you are overdue on paying them. Once you get very late or worse in collections, you're likely to get reported to the credit bureaus. At this point, your creditworthiness is at a potential risk of getting tainted. But this has to get bad. For instance, missing up to 30 days without paying rent would land you in bad books at the bureaus if the landlord reports your case. Similarly, defaulting on multiple utility bill payments would affect your credit score. So make sure you pay rent, utilities, and medical expenses on time. Your credit score will not improve because you paid early, but it won't get hurt either. Remember, payment of bills creates a credit history. Always be on the positive side of the records. Before I jump to the next point, be aware that medical bills get special consideration if paid late. In most circumstances, past due medical bill payments may not hurt your credit score. There are solid reasons for that, including people not knowing whether they have such bills on the assumption they paid, extremely high bills, erroneous reporting to the bureau despite payments being paid in time, and more. 2. Get added as an authorized user. Ordinarily, you should have your own credit file. However, building one is not easy, especially if you don't have active credit accounts in your name or you're probably just starting. Fortunately, you can still build credit without paying interest. All you have to do is become an authorized user on someone else's credit card. Of course, this has to be a family member or friend. The account holder should definitely be responsible with their card for you. Enjoy a positive credit card rating. If that's how it goes, you'll have exclusive access to all perks enjoyed by the primary account holder. This is probably one of the best methods to learn how to improve your credit score fast. Even so, your credit report could be impacted negatively if the primary card holder has financial issues and payment problems. Also, be sure to register on a card that reports authorized users to have your credit history updated at the bureaus. 3. Keep old credit card active. The importance of keeping old credit card active is straightforward. It shows the length of your credit history. And did you know that credit history is a top factor used by credit reporting agencies to calculate credit scores? For some reason, you may get tempted to close your old credit cards. If you do this, you are simply shortening the length of your credit history. In turn, the average age of your accounts decreases, thus affecting your credit score negatively. What credit bureaus look for is positive account information to rate your credit highly. Yet, these old accounts often come with a history of positive payment behavior. Besides credit payment history, bureaus also use credit mix to calculate your overall credit score. Old credit cards provide a diverse mix and variety of credit types that can help enhance your credit rating. 4. Minimize on the number of new accounts. Another practical way how to improve your credit score without debt is avoiding or minimizing on the number of new accounts. Avoid opening multiple new credit accounts in a short period. Usually, this sends a message of financial instability to the credit scoring models, and this can hurt your credit score eventually. New account applications can affect your credit score in a number of ways. For example, it initiates hard credit inquiries on your credit report. If these hard inquiries are multiple and within a short period, they can affect your credit rating negatively, even if the effect looks minor. Also, multiple new accounts reduce the average account age. This directly affects your credit score in a negative way. Lastly, many accounts can be a serious credit burden for you if not well managed. This is because they lead to an increased debt load, and you may find paying these debts handful at times. So, close new and costly accounts before they dig deep into your credit score and pin you to the bottom. 5. Do not utilize your entire credit limit. You can increase your credit score quickly by ensuring your credit utilization is low. Usually, your credit card comes with a limit. If it's low, the credit bureaus will give you a favorable score. But if you bump your monthly limit, it sends shockwaves to the bureaus about your poor utilization patterns. You are likely to get a poor credit score. Of course, it's difficult to keep a balanced utilization ratio on a small credit balance. However, you may ask for credit limit increase occasionally to boost your available balance. With a high credit limit, you can probably spend just a small fraction of it to keep your credit utilization ratio low. According to FICO, credit utilization is a great factor to manipulate when you want to improve credit score from the start, especially when you're a beginner. 6. Clean a bad credit report. No way you'll get a good credit score with a poor credit report. You have to clear any bad reports on your accounts. For example, you should follow up on late or missed payments for bills and collections. These ones can be resolved quite easily. It's as easy as contacting the service providers and explaining to them why you were late. If the misses or late payments are not far-stretched, the service providers may reconsider removing the bad records of your accounts from the credit bureaus. So, make the payment for the overdue bill, but also remember to talk to the company about clearing any bad reports from the credit reporting institutions. However, note that removal from bad books may not be instant, although it doesn't take long either. 7. Pay your credit card balances before statement. One thing you have to keep in check is the credit card balances. Make sure that you have either no balance or have prepaid on the credit card by the time the statement comes about at the end of each month. As you pay in full or extra for the new month, you avoid interest charged on late repayment. This will raise credit score rating on your account in the long run. Actually, paying your credit card early helps lower your credit utilization ratio mentioned earlier. And as you know already, low credit utilization increases your credit score any given time. All said, pay early and extra if you have enough money to do so. Otherwise, this would also affect cash available to handle emergencies and everyday usage. Thank you for watching my video on how to improve your credit score without debt. To help me keep posting more useful videos like this, please like, comment, and share this video. Don't forget to subscribe and hit the notification bell to get updated every time I post a new video. See you next time.